How you doing? Bob Ichino from the Pure Exposure Growth Series and Path Trading Partners. I want to play a video for you before I talk about the markets a little bit today. And I don't normally do this because this feels like a pat on the back, but let me play the video and then I'll talk about it and explain to you why I wanted to play it for you.
I'm just curious, Bob, when you look at it, what do you tell investors? I mean, because the one offset here is interest rates are a lot lower. We're seeing gas price a lot lower. That should provide a good floor and a good cash savings to just average folks, and you'd think for the market. What's happening?
Well, Neil, that repricing is a very real thing. If you just look at where the market is, you mentioned it was one of the quickest declines that we've seen since 2008. It was also one of the quickest rallies. The NASDAQ today got to the area that we were in December. Not 10 years ago, not 5 years ago, just in December.
Wow.
The 2-week sell-off we've seen is reversing a 10-week rally. That's not that unusual when it's put in context, number one. Number two, the coronavirus death rate is what's concerning, 3.3%. If China can actually get declining rates of infection in about 2 months or so, first case was in hindsight about December 27th or so. If they can get declining rates in 2 months, the U.S. is going to get declining rates quicker than that. I'm going to probably start buying on Monday unless this thing explodes over the weekend.
Okay, so obviously that was me on Neil Cavuto's show on Fox News last week talking about buying the market on Monday. Obviously today, given that the Dow was up almost 1,300 points, almost 385 points on the NASDAQ, you were up basically 5% on the Dow, 4.5 on the NASDAQ, 4.6 on the S&P 500. Big move up, and we are by no means out of the woods. Now, did I think we would get that big of a move on Monday? No. I actually thought we would go a little bit lower still, and it was time to start accumulating shares of things that you really want to own. This is one of the beauties, by the way, about the futures markets, is that you can actually buy small indices, especially with the micros that they have now in the different indexes, and that's what we were looking to buy. We weren't looking to stock pick yet. We were looking to buy micro S&P and micro NASDAQ and kind of start to build a small position in toward what would be one of two things. Number one, either the economic impact wouldn't be as bad as they thought, or not just central banks would get involved. And that's what we see happening. That's where we got that extra blast to the upside today. It was with the announcement of an emergency G7 call, so that's the group of 7 leading economic nations, largest economies in the world, excluding China, are going to get together and they're going to discuss the fiscal and monetary policy response to the slowdown that's sure to be caused and is already showing up in some of the data, especially in China, by COVID-19, the novel coronavirus. So the fact that it's a concerted effort, again, this is what I was looking for. Either things were going to get a lot worse and it didn't really matter that much, which is why we're going to take tiny positions in those tiny micro S&P and micro NASDAQ futures that the CME offers. Or we were going to have things turn for the better. Or a third option was that there were going to be fewer cases in the US and it was going to start to slow down here and in Europe. That hasn't really happened. So while we still potentially have an advancement of the human toll, the governments of the world are getting together and planning and strategizing on how to deal with the economic fallout. And that's really what we're talking about here. I'm not any sort of medical professional, so I can't give you any talking points as to how the virus is performing from a standpoint of is it getting better, is it getting worse. I would have no idea. I would just be parroting what other people say, which is exactly what we do not do at Pure Exposure. Pure Exposure is all about independent thought. That's what we're trying to push out there, is think for yourself, get the information that you know is factual, and think for yourself. And that's what I was responding to when I was on Neil Cavuto's show on Fox. I was saying from the information that I know, there's going to be an economic effect from this virus, and governments are going to have to kind of come together and potentially do something about it. Seems like they're going to do that. We also saw moves in commodities like copper and crude oil, which kind of back up the thesis that something is going to get a little bit better economically. So that's where we're at with this thing. I don't really want to talk too much about what we're going to do going forward, but there are some levels up above that the market's going to have to get through, and maybe I'll touch on those in the next video or two. But when you're looking at the move that we got today, substantial, not enough to say it's over though. We are not out of the woods, but it was definitely good that we mentioned that we were going to get in and start buying some of these smaller positions and enjoy some of this ride up. And lastly, we're normally not bottom pickers like this at all. But if you look at in the span of less than 10 weeks, the market went from a record high to a 52-week low. That not only has not happened in a long time, it's never happened. It's never happened with the stock market data we have. Now, we don't have 10,000 years of data, so it could happen again. But this was a unique opportunity, at least, to get into some things that you want to hold for a long time and potentially scalp some long trades from a more short to medium term perspective. I'm Bob Iacchino. Remember, our next show is March 16th. Hope you guys sign up. Watch our replay down below, and I will talk to you guys in the next video.